Okay, we really need to talk about investment anxiety. So today we're going to build a system, a set of really simple rules that's going to make it pretty much disappear. It'll let you sleep soundly, even when the market is in a total free fall.
Just let that sink in for a second. Seriously, if checking your portfolio can actually ruin your sleep, you've already lost control. You are not managing your money anymore. It is 100% managing you. So what's the playbook? It's these 3 rules. That's it. And they're designed to replace that 2 a.m. panic with calm, pre-decided actions. You'll know exactly what to do when things go south.
All right, rule number 1, the sleep size rule. Think of this as your built-in safety net. It's all about capping your stress before you even think about clicking that buy button.
Okay, so here's the rule, and it's dead simple. Your absolute maximum position in any single stock is the smaller of 2 numbers. Either 2% of your total portfolio, or an amount where a 50% drop would cost you no more than 1 week of your take-home pay. That's it. We'll get into why in just a sec.
So why does this little rule work so well? Well, it basically hacks our own psychology. It's built around a powerful idea called loss aversion. The fact that losses sting about twice as much as gains feel good. The sleep size rule just prevents any single loss from completely hijacking your brain.
So let's figure out your number. Right now, I'm telling you, this one simple calculation is going to fundamentally change how you look at your investment risk.
So we're just comparing 2 caps. First, 2% of your portfolio. Easy enough. Second, an amount that's twice your weekly take-home pay. Let's just run the numbers with a quick example.
All right, let's run a quick example. Imagine you've got a portfolio worth, say, 250,000 euros.
Okay, 2% of that is 5,000 euros. That's your cap number 1. Got it.
Now for the second number, let's just say your weekly take-home pay after all the taxes is 3,000 euros.
Right, so we double that. Your pay-based cap comes out to 6,000 euros.
So you've got your 2 numbers, 5,000 and 6,000. Now, the rule is simple. You always pick the smaller one. So your sleep size is 5,000 euros for any single stock. No exceptions. Period.
Okay, on to rule number 2, the 10-45 cadence. This is how you stop compulsively checking your phone and start managing your portfolio like a pro.
This is the big shift we're making. We're going from the old way, anxiety, checking it every day, reacting to scary headlines, to the new way, calm, systematic, and scheduled. A 10-minute check-in just once a month.
So what does this new rhythm actually look like? Well, for 10 minutes every month, you check that your auto contribution went through, you review any portfolio drift, and, this is really important, you log any news or gut feeling that made you want to trade. Then, for 45 minutes every quarter, you rebalance if you need to, review your original reasons for investing, and you look back at all those temptations you smartly ignored.
But you're probably thinking, what about a huge market crash that happens between my scheduled check-ins? That is where rule number 3 comes in, the alert ladder. This is your automated safety net, and it replaces screen time with smart alerts.
Boom, the market drops, hard. But instead of panicking, you've already decided exactly what you're going to do.
This is your pre-decided playbook. If a stock drops 7%, an alert goes off. Your action? Absolutely nothing. You just make a note of what changed. No trades. If it drops 15%, you check one thing. Is it still within your sleep size? You only trim it if it's not. And at a 25% drop, you execute your pre-written plan. Rebalance, buy more, whatever you decided. And then, this is key, you lock yourself out. No trading for 30 days. This stops you from making emotional follow-up mistakes.
Okay, this system sounds great in theory, but it's totally useless if you don't actually set it up. So let's do it. Let's activate the whole thing right now in a single 20-minute sprint.
Here's your checklist. It's super fast. 1. Automate your monthly bank-to-broker transfer. 2. Create those 10-45 calendar events and attach your checklists. 3. Go into your brokerage app and set up your 7, 15, and 25% price drop alerts. And 4. Create a super simple investment thesis template in your Notes app. Boom, done. Your system is now active.
And here's one last pro tip for you. Design some friction. Get that broker app off your home screen. Seriously, bury it in a folder. Make it just a little bit harder to open on an impulse. Trust me, it works. So that's the whole system. Let's just recap. 1. Sleep size caps your risk. 2. The 1045 cadence protects your time and your sanity. And 3. The alert ladder automates your big decisions. Risk, time, decisions, all back under your control.
And that leaves me with one final question for you. When you go to set up those price alerts, should you base them on the current price or should you anchor them to the 52-week high? You know, there are actually strong arguments for both. Drop a comment below and tell me which one you use and why. I'm curious to see what you think.
If this system is going to help you invest with a lot less anxiety, do me a favor and hit that like button. And of course, subscribe for more frameworks that simplify your financial life. Thanks so much for watching.